Good afternoon, my name is Jordan Lambert, market analyst at Jalatoman Management. There is not much to add from yesterday really, as the market remains quiet and range bound, and the next move really hinges on the employment data today at 1:30 GMT in the form of the US non-farm payrolls. The private sector non-farms on Wednesday revealed strong improvements for June. But with the government spending cuts, today's overall US non-farms is estimated to be 20,000 jobs lower than the 175,000 in May. So 155,000 jobs is what the market is expecting for June. So any deviation from this number is likely to trigger a move for both gold and equities. Not even Mario Draghi's words could shift gold out of this range of 1237 to 1260, despite the ECB President saying that further rate reductions could occur if the economy continues to be sluggish. This weakened the euro against major counterparts, but it failed to shift gold out of this range. Let's just take a look at the charts. I'm looking at the 4-hour chart again. We are seeing a nice double top forming here. I'll just remove the Bollinger Bands just for now. So we have a nice double top forming. So we had a high on Tuesday at 1267, then it found support at 1237. It made a lower high at 1260. So this neckline 1237 is also a support line, is quite a critical level. We have seen the market is quiet and range bound and low volatility at the moment, mainly because of the US Independence Day yesterday, but also because of the indecision in the market. Traders don't want to take too much risk ahead of the non-farms today. But if we look at the previous 9 candlesticks on the 4-hour chart, we can see that they are drifting lower, and each candlestick has been trading in quite a narrow range, which just gives an early indication that the sentiment is slightly on the bearish side. And often a good sign that price is going to break support is when we see price just creeping up to support, and it just shows that the bears will not have exhausted themselves by the time they get within a distance to make a final push through this level. If price before the non-farms, if price was up at say 1255 and the bears launched an attack at this level of 1237, we could see the bulls put up a good defense for this level. But if price is creeping towards this level, if the US non-farms is better than expected, we could easily see the bears push through the bulls enemy line and down lower. So if we do get a break, it is likely to be backed up by the US non-farms. If it's better than expected, we should see a break. If it's worse than expected, this double top that is forming is just discarded. So the short entry would just be as price breaks below 1237, maybe 1236. Place your stop above the high of the previous 4-hour candle. Target level could potentially be 1213, which is a Fibonacci retracement level. If you draw a Fibonacci grid from last Friday's beginning of the rally up to the high that we saw on Tuesday at 1267, you'll see that the 61.8% level is around 1213. So if we get a breakthrough 1237, that will complete a double top, and then you could look to target 1213 because it is likely to find some support at that level. And just place a tight stop. Just to inform you, it is likely to be volatile, especially if the US non-farms is better than expected and we get a double top complete. It is likely to be volatile. If price starts quite far away from this neckline, it could shoot down and the the shorter time frames will be showing oversold levels, so we'll get traders buying oversold levels on the 1 minute and the 5 minute charts, and then also on the opposite side of it we'll get traders looking to trade on the momentum, so we'll get a lot of volatility there. But I think the key is, if price is just sitting above 1237 before the non-farms and there's low volatility, we could get a break of 1237 on the first attempt, and we could go down probably as low as 1230 or even lower before we get a bit of a pullback. But however, if we do start from quite far away from 1237, we are likely to get a bounce because the bears will have exhausted themselves a little bit, and it might take 2 attempts to break it. Thank you very much for listening to me. Remember, non-farms today, 1:30 GMT. Also, we have the unemployment rate for the US at that time as well. So it's a big day for trading, and make sure that you are ready to trade. Thank you very much. Thank you. Bye.